Did you know that for over 100 years, the price of gold has been dictated by London and New York? But look at this staggering number. Gold prices in Shanghai are now trading up to $100 per ounce higher than in the West. A financial coup d'etat is quietly unfolding. Physical gold is being drained from Western vaults and surging toward the East. Is the era of the US dollar and COMEX dominance finally over? Welcome back. Today, we are diving into a tectonic shift in the global monetary system that most mainstream media outlets are completely ignoring. We aren't just talking about a minor price fluctuation, we are talking about a total migration of power. Pierre Lassonde, a legendary figure in the gold industry and a man who has spent over 50 years navigating these markets, recently dropped a bombshell. He argues that we have entered a new era where the West no longer holds the remote control for gold. While Wall Street is busy trading paper gold and digital promises, the East, led by the Shanghai Gold Exchange, is cornering the market on the only thing that actually matters: physical bullion. In this video, we'll decode the Shanghai Premium, explore why gold is leaking out of London at record speeds, and why Lassonde believes this path leads to a gold target so high it sounds like a typo: $17,250. Buckle up, we are standing at a historic turning point. Let's find out why the center of the financial universe is moving east. To understand why Pierre Lassonde insists that Shanghai is now holding the sharp end of the stick, we first have to strip away the naked truth about how gold prices have been manufactured for decades. For nearly a century, the world has looked to two places: London and New York. This is what we call the paper market. When you see the gold price ticking on your phone, you're mostly looking at the COMEX or the LBMA. But here's the kicker. These markets don't trade much actual gold. They trade promises, they trade contracts. In fact, for every single ounce of physical gold sitting in a vault in London or New York, there are hundreds, sometimes thousands of ounces of paper gold being traded digitally. It's a massive leverage game, a paper game. As long as everyone is happy with their digital receipts, the system works. But Pierre Lassonde is pointing to a fatal flaw that is starting to crack. Enter the Shanghai Gold Exchange, or the SGE. Unlike the West, Shanghai doesn't play the leverage game. The SGE is a physical-first market. When you buy gold in Shanghai, you aren't just clicking a button to own a digital derivative. You are buying bars, physical, heavy, yellow metal that gets delivered. And right now, the East is hungry. This brings us to a phenomenon that is sending shockwaves through the financial world: the Shanghai Premium. For months now, gold has been trading in Shanghai at a significantly higher price than in London or New York. We aren't talking about a few cents here. We've seen premiums of $50, $70, even $100 per ounce. Now ask yourself, why would anyone in China pay $2,400 for an ounce of gold when they could theoretically buy it for $2,300 in London? The answer is as simple as it is terrifying for Western bankers: trust. The Chinese market, driven by both the central bank and private citizens, has lost faith in the paper promises of the West. They don't want a claim on gold, they want the gold itself. And they're willing to pay a massive surcharge to make sure that metal is sitting in their own vaults, not someone else's. This isn't just a theory, we can see it in the data. Look at the inventory levels. While the Shanghai Gold Exchange is seeing record-breaking delivery volumes, the vaults in London and the COMEX are being bled dry. Gold is literally being sucked out of Western warehouses, melted down into 1-kilogram bars preferred by the Asian markets, and shipped east. It's a global arbitrage play. Traders are buying the cheap paper gold in the West, demanding physical delivery, and immediately shipping it to Shanghai to pocket that $100 premium. It's the ultimate bank run on Western gold reserves. London and New York are essentially running a store where the shelves are getting emptier every day, while the store across the street in Shanghai is packed with customers willing to pay an extra premium just to clear the inventory. Pierre Lassonde's point is clear. You can only suppress the price with paper for so long. Eventually, the guy with the physical metal is the one who sets the price. And if the West runs out of metal to deliver, that's when the paper game ends and the real price discovery begins. But this migration of gold isn't just about who has the shinier vault.
It's part of a much larger, much more dangerous movement. Because as this gold flows east, it is carrying something much more valuable with it: the power to collapse the current financial world order. To understand the magnitude of this shift, we have to look at a mechanic called arbitrage. Think of it as a massive, high-stakes game of connect the dots. When the price of gold in Shanghai is consistently higher than in London or New York, it creates an irresistible vacuum. Professional traders, the smart money, begin buying every ounce of cheap paper gold they can get their hands on in the West, demanding physical delivery, and immediately putting those bars on a plane to China. Why? Because they can instantly sell it for a $50, $80, or $100 profit per ounce. It's the easiest trade in the world, and it's happening at a scale we've never seen before. But the traders aren't the only ones at the table. The whales have entered the chat. According to the World Gold Council, we are witnessing a buying spree from central banks that hasn't been seen in generations. China, India, Poland, Turkey. They aren't interested in tracking the price or owning an ETF. They are buying physical bullion. They are stacking bars in deep, secure vaults far away from the reach of the Western banking system. Think about the irony here. For years, Western institutions have dismissed gold as a pet rock or a relic of the past. They were happy to keep the price suppressed using digital derivatives while they focused on the strength of the US dollar. But while the West was playing with paper, the East was building a fortress of metal. Now here's the twist, and it's a dangerous one. By maintaining a lower paper price in London and New York just to keep the illusion of a strong dollar alive, the West is effectively subsidizing its own disarmament. They are making it cheap for the East to drain its physical reserves. It's a slow-motion strategic suicide. Every time a Western bank sells paper gold to tamp down the price, they're just inviting more trucks to line up at their vaults to haul the real stuff away. The West is losing its most critical financial defense mechanism simply because it refuses to admit that the paper game is rigged. Pierre Lassonde calls this a migration of sovereignty. When the vaults in London go empty, the influence of the London Bullion Association vanishes. You cannot dictate the rules of a game if you no longer own the ball. But why does this matter to you? Because we are approaching a breaking point. Imagine a game of musical chairs. Right now, there are 100 people holding paper gold certificates, but there is only one actual gold bar left in the vault. As long as the music is playing, everyone feels rich. The East is taking that last chair and moving it across the world. When the music stops, and it always stops, there will be a panicked rush for the exit. This is what we call a global short squeeze. If the West cannot deliver the physical metal to settle the billions of dollars in paper contracts, the system defaults. The price wouldn't just rise, it would teleport. We would see gold gap up by hundreds of dollars in a single day as shorts scramble to find physical metal that simply isn't there. This is the casino environment Lassonde warned about. It's no longer about supply and demand in a jewelry shop. It's about a systemic collapse of a leveraged lie. But this isn't just about a spike in price. This migration of gold is the foundation for something even bigger, the birth of a new financial architecture that doesn't need the US dollar at all. But how exactly does a gold bar in Shanghai's vault translate to the end of the dollar's global reign? And more importantly, how does this lead us to that $17,250 target? To see the endgame, we have to look at what China is actually building. It's not just a gold exchange, it's a parallel financial universe. For decades, the US dollar has been anchored by oil, the petrodollar system. If you wanted energy, you needed dollars. But that anchor is fraying. China is now aggressively pushing the petro-yuan.
They are telling oil-producing nations, sell us your oil in yuan, and if you don't trust our currency, you can instantly convert that yuan into physical gold on the Shanghai Gold Exchange. This is the gold link that the West has lacked since 1971. By backing their trade settlements with the promise of immediate conversion to gold, the East is creating a hard asset alternative to the U.S. Treasury bond. This is where Pierre Lassonde's $17,250 target moves from crazy to mathematical. If gold becomes the currency of last resort, the only asset trusted to settle international debts when trust in fiat currencies collapses, the price isn't determined by jewelry demand. It's determined by the total amount of global debt and the limited supply of gold. Pierre Lassonde looks at the Dow to gold ratio. In the late 70s, that ratio hit 1-to-1. If you apply that same historical logic to the current debt levels and the sheer volume of dollars printed in the last 4 years, the math starts to point toward those 5-figure targets. It's not a prediction as much as it is an adjustment to the reality of currency debasement. But here is the million-dollar question. What does this mean for you? If the power of price discovery has moved to Shanghai and the paper game in the West is approaching a default, the way you own gold matters more than ever. Many investors think they're safe because they own gold ETFs or digital claims, but in a systemic squeeze, the kind we discussed, a digital claim is just a piece of paper in a burning building. When the casino breaks, you don't want a promise of gold, you want the gold itself. This is why we're seeing a massive shift toward physical ownership and non-custodial storage. We are witnessing the death of a 100-year-old empire of credit and the birth of a new era of hard assets. The Shanghai Premium was the first warning shot. The drainage of Western vaults was the second. The third shot? That will be the day the West realizes it can no longer print its way out of a gold shortage. So as we stand at this crossroads, the final question isn't about whether gold will go up, it's about where you stand as we enter this new era. Let's bring this all together. What is the final takeaway from Pierre Lassonde's warning, and what is the one move you need to make before the Buktuong Salahain, the wall of fear, comes crashing down? The window to act is closing faster than the vaults in London. What we've discussed today isn't just another market cycle, it is a fundamental realignment of how the world defines value. Gold hasn't changed. It is the same inert yellow metal it has been for 5,000 years. What has changed is the pricing power. It is slipping away from those who print paper and moving toward those who hold the truth in their hands. As Pierre Lassonde warned, the gold market is transforming into a casino, not because gold is a gamble, but because the Western financial system has placed too many bets on a supply of physical metal that no longer exists in their vaults. When the music stops and the Shanghai Premium suggests it's already slowing down, the gap between the paper promise and the physical reality will be bridged by one thing: a vertical explosion in price. We are no longer just watching a chart, we are watching a global exodus. The West is losing its gold, its leverage, and eventually its ability to dictate the rules of money. Pierre Lassonde believes we are at the foothills of the most insane bull run in history, a journey towards $17,000 that will be fueled by the collapse of trust and the desperate scramble for the currency of last resort. But the real question isn't about the price, it's about where you stand. Do you trust the digital derivatives of London and New York, or do you trust the physical gravity of Shanghai? What's your move? Are you holding the receipt, or are you holding the asset? Leave a comment below. I want to hear your take on this shift toward the East and how you're positioning your portfolio for this new era. Don't wait for the Buktuong Salahain to crumble. Stay sharp, stay physical, and I'll see you in the next analysis.